Hello, okay, so today I want to make a follow-up video to yesterday's video, and the reason is I spoke about the curious timing of Jim Rickards' viral article where he said gold is going to go to 7,000 and apparently went viral in China and whatnot. And I said it was very curious because I've been bearish on the precious metal markets on gold and silver for a bit now, and just found it curious that there was no solid evidence in either the data coming out of the paper derivatives market, which controls the prices. So it's actually the data that comes out of the derivatives market is more important for the short term. And there was nothing indicating that a bottom had been set, and that's why I believe gold and silver prices would head lower. So it's just curious to me that this would come out. And coincidentally, it also came out when Alan Greenspan said gold is a good investment. So anytime a former central banker, the most powerful central banker in the entire world at one point, says gold is a good investment, you know that the banker's about to raid gold, because all they're trying to do is drive people into gold at prices when there's lower prices that are coming. So it, again, like I said yesterday, it basically serves as a psychological blow to people that are going to move out of the stock market bubbles that exist right now, and into physical gold or physical silver. So I think I mentioned yesterday, I said, we'll know for sure whether Jim Rickards is a shill, and I've always said he was a shill for the bankers, because though he says many positive things about gold, like I said, the timing is very curious of when he says certain things, and then also he always is perpetually, I've seen lots of interviews with him where he's always quoting official government statistics, which everyone that understands anything about economics knows is a total farce. So, you know, I think the banker government run elite right now are saying that U.S. unemployment is around 5.9%, which is just ridiculous, because everyone knows unemployment is anywhere from 25 to 40%. If you look at shadow stats that gives you true figures, their unemployment rate is almost 4 times higher. With inflation, which I've also heard Jim Rickards always say, oh, inflation's so low. So for the last 12 months, it's been 1.7% according to the official U.S. government statistics. But if you look at the shadow stats again, they'll say it's around 9%. It's been running around 9% for a long time, which is 6 times higher. So it's not just that they're lying by leaps and bounds and exponentially understating the true economic indicators, which people would realize, okay, economy is still in a recession. It never came out of it since 2008. And the only thing that they're using is they're artificially pumping up the stock market to say the economy is good. But you can't look at the stock market as an indicator of economic health anymore, since all financial markets are so heavily manipulated. So, if you're actually living in the United States, as I think Jim Rickards is, I'm not positive about that, but you literally have to be a moron to believe these official government statistics, because you can see with your own eyes all the people out of work, all the people on food stamps. You can literally see soaring energy prices. You can see soaring food prices. So you know that inflation and the other official unemployment statistics is a farce. So I know Jim Rickards is not a moron, so that's why you have to say he's a banking shill. So I do realize that the price of a lot of commodities, a lot of food commodities like wheat, rice, soybeans, whatever and whatnot, have dropped a lot in the second half of this year. But I'm talking in general, when the U.S. government is always reporting dirt low inflation rates. They've been doing that in forever, in rising price environments all the time. When you look at the real costs of living, like everybody has to eat, everybody has to use energy and whatnot. So in my free newsletter, I think on October 27th, I said there's clear and imminent danger right now in the precious metal markets, in the gold markets and silver markets. And then gold was trading at $12.30 something at the time, so gold's already dropped more than $30. So Jim Ricker's coming out saying gold's going to 7,000. Alan Greenspan saying gold is a good investment for now is not the reason why I thought it was bearish. Because with my subscribing members, we actually took some shorts against the precious metals over a week ago, and 2 of those shorts are now up like 33%, and the other one's up, I think, 47% or so. And it was based upon data that I was looking at in the paper derivatives market. Because even though, the interesting thing is, from time to time I used to send some articles to this precious metal site, but the precious metal site never has any dissenting opinion, which I think is dangerous. So the articles I would send them over time would be dissenting opinion. So for example, I would send them the article saying, hey, I don't think really the signs are in that there's a bottom in gold and silver mining stocks yet, and I think there's a lot of danger. People need to be cautious at this point and even take hedges like we have, right? Where you're going to basically open up some shorts that will hedge any physical positions that you're holding. But they never ever printed any of those articles I sent them in the past, I guess because it goes against their narrative for always being very, very heavily bullish gold, heavily bullish silver, which I think is it's a dangerous thing, because dissenting opinions are very, very valuable. And you know, I'd send these articles saying, hey, I think these are really good for your listeners to hear this alternate viewpoint, because you know, I look at your website and everyone is saying the bottom is in, especially on October 6th when you had the very heavy spike, reversal spike in gold and silver on very heavy volume. I've always had a problem with technical charts, because I said, look, every market is manipulated and the bankers are painting the charts. So I said they painted this perfect reversal day, right? Like heavy volume, gold and silver spiking, but it wasn't maintained. So I said, look, that looks to me like a typical banker painting the charts, and it looked like a typical bull trap, you know, the bankers trying to pull more people in to the gold and silver market, because everyone now, like on certain sites, are saying, oh, the bottom's in. You pull all these people in, and then you psychologically smash them by laying this bull's trap. So that's why we took the opposite side, because I was seeing no confirming evidence that that was the bottom, that, you know, the bottom was in for gold and silver mining stocks. I saw no confirming evidence that the bottom was in for gold and silver yet. So, you know, like I said, we opened up some shorts, and they've done well so far up to this point. And I expect them actually to continue to do well, because I don't think that this push down is over. This raid is over yet in gold or in silver yet. And I think they're going to head lower. So I have certain targets, which my members know about, but we will have to reassess, because gold and silver markets are dynamic. So if those targets are met, then we'll have to reassess to see, oh, is this the bottom now, or could it possibly even head lower, and will we add more shorts against gold and silver in the meantime, just to balance out the physical positions that we hold in these markets? Because I do think at this time it's dangerous to try to dump any physical gold or physical silver that you hold or try to buy it back, because the fundamentals of the physical markets are very, very bullish, but that has never had effect on the bearish paper markets, because you have to understand that the bankers dictate the prices in the paper, fake, bogus, criminal paper derivatives markets. And again, for those people that say, oh, look, these people don't understand free markets and capitalism, that's why they're always pro-bullish. I'm not going to like slam the people that are, you know, that said that the bottom was in on October 6th for all the gold and silver mining stocks and whatnot, because what they're looking at is they're looking at the fundamentals. And yes, the fundamentals are very strong and are bullish for physical gold and physical silver. So I'm not going to slam them, because they are actually right from looking at the fundamentals of the physical gold and silver market and saying that it's a very, very strong market right now, even though it's not reflected in the paper and spot prices of gold and silver. So it's just the fact that even though the fundamentals are strong in the physical market, it's going to take some time for the spot prices and the paper prices to reflect that in the precious metals markets, because for now, the criminal bullion bankers are still in charge of setting the paper prices. Look, everyone who is human has been wrong in the past. I've been wrong in the past, but what is important, I guess the only people that haven't been wrong in the past are the maybe the Wall Street bankers are using high-frequency trading, algorithmic, computerized programs to rig the stock market so they can have perfect trading quarters that are statistically impossible in a free market. So, you know, there's plenty of banks that have done that in the past, but that is just basically because they're executing criminal behavior. But if you're not executing criminal behavior, you're going to be wrong from time to time. I've been wrong, so has everyone else in the you know, that operate within financial markets, whether you're in stock markets, commodity markets, or whatnot. But the important thing is to learn from your mistakes. So I feel like we've done that this year, because last year we looked at some data that we believe was bogus that the bankers were putting out. So we knew not to put as much emphasis on that data. So we were looking to other data in the paper derivatives markets, and what we saw during that reversal day, we didn't see a true reversal. So that's why we went short, to balance out our long positions in physical gold and physical silver. So that the only thing I'm slamming is about, like, I'm slamming sites that won't accept opinions that disagree with theirs, because that is a dangerous thing. That's what I'm slamming, is the inflexibility to consider alternate opinions and to give them some airtime. So they'll just shut out anyone that disagrees with them. I'll slam the analysts that obviously don't understand gold and silver markets and continue to deceive people by saying, oh, look, the reason why it's gold and silver prices are heading lower is because there's no demand, and until demand comes back. That is bogus, because the physical markets for gold and silver, there is so much demand. Even I believe it was the head of the Shanghai Gold Exchange came out and just said that the demand last year in China in 2013 was over, I believe it was over 2,200 tons. And you're saying there's no demand, they're just misleading. So the people that are misleading you and lying to you, and those are the people that I'm slamming. But I'm not, you know, slamming anyone else. So it's just that inflexibility, that rigidity, and the disinformation that really upsets me, because it really makes it hard for gold and silver investors to still believe in gold and silver, which they should, even, you know, as this rate is going on. They should still believe in physical gold and physical silver, because it will make a remarkable comeback once the bottom is in. Everyone should still have faith that has been buying gold and silver over the years, physical gold I'm talking, because I never advocate paper silver, and they're still holding it. And if you're even adding it this time, even though I think it's going to go lower, and you'll have opportunity to add more physical gold and physical silver, even lower prices soon, you still just want to keep holding on, because eventually, when China and Russia have had enough, they are going to come in, and gold and silver prices are going to soar. So eventually there's going to be a huge divergence between the fundamentals of the physical gold and silver market and then the criminal, bogus, artificial, fake paper gold and paper silver derivative markets. This situation cannot persist long term. Okay, so that eventually will happen, and then when that happens, you want to be, again, positioned on the right side of that equation. Okay, so that's all for now, and I think I already have an idea for the next video I'm going to make, and I'm going to discuss the Swiss gold referendum coming up on November 30th, and I'm going to discuss why that is so important. So if any of you are watching this and have friends in Switzerland, please send that next video to them, because I'm going to discuss why that referendum is so important to freeing gold and silver markets from the criminality of all these bullion bankers. Okay, thanks a lot for watching. As always, please subscribe below if you want to know exactly when we release our next videos. And as always, remain intensely curious. So long.